I have many people ask, Scott, is IBC, the infinite banking concept, or privatized banking, is it credible? Is it something that I really should consider placing a portion of my assets or a portion of my wealth inside of this strategy? I'm not familiar with it, Scott. I don't see it advertised all over the place on TV, so I don't have a background or experience level with it. I did talk with a CPA one time who recommended it, or I talked with a wealthy friend of mine who highly recommended it, said it was the only way to go. But I'm not sure because I've not been exposed to it. So is it credible? Just level with me. Man to man, man to woman, is this credible? Okay, so let's go through 10 things here pretty quickly. Number one, the platform used by IBC is over 200 years old. It uses a dividend-paying, participating whole life insurance policy. Now, those policies have been changed and improved over the years, and there's only a handful of companies today that have mastered this and are banking friendly. Most of the companies out there today are not banking friendly. But if you want a list of those, reach out to me and I'll be glad to provide that to you. But this platform is well over 200 years old. Secondly, the insurance carriers that do privatize banking, that manufacture these products for their clients, they're all A+ rated companies. Also, these accounts are guaranteed by each state. So I've had people ask, Scott, it's not FDIC insured? And my response is no, and that's probably a good thing because FDIC is questionable at best as far as their financial soundness. They could cover about 1 to 1.5% of all of M1 or M2, which is the accumulation of all the accounts combined in the United States that are in the banking system. So I would say it's 100 times better than FDIC. It's backed by the individual state that you purchase the policy in. It's also used by the wealthiest Americans. The wealthiest people today in the United States are practicing the infinite banking concept or privatized banking. They're shoving assets and their wealth out of the public banking arena, which is regulated by Dodd-Frank and exposed to taxes and to creditors. They're shoving that into the private banking space. And by the way, these Americans, they've got virtually unlimited assets to do their own due diligence. They've got attorneys to research everything. They've got CPAs and tax professionals to research everything. So we've been vetted 6 ways from Sunday, as the statement goes, and it's credible as far as what we do. Also, not only used by the wealthiest Americans, it's also used by Fortune 500 corporations. There's a whole list of these, company after company after company, that's shoving some of their wealth into a properly built dividend-paying whole life insurance policy. Why? Why would they do that? Because we offer guarantees, guaranteed interest rates on the base cash value. Also, a very predictable, very reliable, but non-guaranteed dividend on top of the base interest rate. So it's also used by public banks. Scott, did I see that right? Public banks? Yes, most public banks, in order to meet their bank charter, in order to meet their solvency requirements, in order to meet the regulatory oversight requirements, they have to have so much cash in a guaranteed return location. That place just happens to be with us, with a properly built dividend-paying, participating whole life insurance policy. And by the way, banks, the public nature, you can go look this up. You can see how much they have in life insurance. Also, Walt Disney, JCPenney, the Sears Tower project, it's now been renamed, but these massive companies were started by privatized banking. Also, a large percentage of Congress today is participating in privatized banking, and y'all, they're instrumental in writing banking law for the United States. So it should tell you something. If the people that's writing the law is participating in privatized banking, it should make us kind of rise up and take notice. Number 9, it's safe, it's guaranteed, and it's recognized as a Tier 1 asset. Now, what that means is it's of the highest quality in the United States financial system. So high quality asset. It also predates the IRS, and it predates income taxes that came about in the first part of the 20th century. So this goes back a long ways, used by the most wealthiest people. Corporations use it, banks themselves use it, Congress uses it. It's a very efficacious, dependable, reliable, safe, predictable place for you to put your money and then for you to grow your wealth. This is not just a place where you put money and it grows at a little bitty meager interest rate. No, that's not privatized banking. Get with us or someone from my company and we'll explain to you the power of leverage, the power of loans, the power of cash flow, the power of capturing lost interest cost, the power of capturing lost opportunity cost. When you add all that together and you become the bank, you'll recognize there's a lot of profit involved in privatized banking. Is it credible? Heck yeah.